How's the last few weeks been?
It's been a tough market, but it's not been a tough market in the sense that people aren't lending money. It's just been a tough market in the sense that there's so much extra work that needs to be done, and banks are just taking their time scrutinizing everything. It's been tough making sure that everything's correct the first time before we send it through.
Yeah. And, I work, almost hand in hand with you, and, and it's not just, yourself here, but the whole industry right now. Yeah. It's like I've always said, no one has gone unaffected here. But what's the message? What's the message that the banks are putting out into the marketplace right now?
Look, the banks are open for business. That's the message they're sending loud and clear, is that they are very much still open for business. But at the same time, there's the compassionate side to the banks, that the banks are there to help you if you need it. So from an open for business perspective, I think the banks are trying to make clear that this is not a credit crunch, this is an income crunch.
Yep.
So what that means is that, we're just doing a lot more verification of income that you're earning. What industries are you working in? Or have your hours been cut?
Yep.
Things like that. So there's a lot more detail that's going into that type of thing. From a compassionate perspective, all of the government stimulus packages that you hear about, you can phone your bank up and you can get a reduced interest rate. You can get deferral of payments. You can pause those payments. Most of the lenders are happy to work with you to try and, suit your position.
Yeah. I mean, that's the one thing to remember with banks, because sometimes we see them as the unnecessary evil, right? But they play the biggest part in the investment game. They play the biggest part when it comes to buying your own home. And people forget that. They are your partner. If you look at it, it's like you take any business, right? They're putting up 80% of the cost, right, of the collateral into the business, into the partnership. They need to be, you need to work with them, okay?
Absolutely.
They play an important part. And I found them to not, even prior to the existing, economic climate we're in, I found them to be very reasonable, very understanding. The key thing and the message I keep pushing out to everybody is communication.
Yeah.
You've got to communicate with your suppliers, with your vendors, with your banks, with the people that you're doing business with. But it's certainly an income crunch as opposed to a credit crunch. But tell me, what are some of the industries right now that banks are keeping their eye on?
So your industries where there's a lot of employees that have been stood down. So typically your tourism industries, your hospitality industries, retail industries. And other industries like that are, there's a couple of lenders that have specifically named those industries out in what they call temporary policy. And other banks are just rather having a little bit of a look at it as opposed to, naming it out in policy per se.
Yeah.
But they really want to make sure that you're still earning what you are earning, and make sure that that's not something that's going to be cut in the near future. So more to that, it's also, you might get an approval, but then the banks are going to have a look before settlement if you actually are still earning that money, and if things have been cut again.
Sure. So what's the message that you give out to some of these industries that are doing it a little bit tougher right now? What would you say to the people in those industries?
Hang tight. Things are going to change. Things are going to get better. The banks are there to help you. If you've got a current mortgage, get on the phone to your lenders, whoever that is at the moment. Make sure you're getting rock bottom rates. The banks are there to help you do that. If you've lost your job and you've got job seeker payments, the banks are helping you helping you along with that.
Yep.
They're allowing you to defer your payments for up to 6 months. Some lenders are working on a 3-month plus 3-month basis. So in other words, they check in on 3 months to see if you're still without work.
Yep.
Others are just giving you 6 months straight up front. So it varies from lender to lender. For me to say to you that this is the cast in stone policy is a bit difficult. But certainly if you're doing it tough at the moment, the first thing you should be doing is getting on the phone to your lender and getting that support from them, because it's just going to make your life easier going in for the long run. Bear in mind though, as we discussed a little bit earlier, it's really only a break the glass in case of emergency situation, because you do need to bear in mind that whilst you get deferral on payments or paused payments, that interest is going to be capitalized back onto your loan. Yeah. So it's not free. You will have to pay it in the end, but you're just going to have to pay it at a later stage.
Sure.
So keep that in mind when you are doing that, because you don't want that to come back and bite you.
Yeah. Yeah, and I think that's a very important message out there, because there has been some confusion. People are thinking, hey, the bank's just going to come in and be the savior here and halt my repayments for 6 months. Well, no, they're not. They're just putting they're putting them on a freeze, but you're going to have to not only pick up the repayments 6 months' time, but the loan will be bigger because of the interest that's capitalised. So very important message. What about the delays that you're finding with banks right now? Because there's two schools of thought here. Like, interest rates are at an all-time low.
Yeah.
They haven't been this low for 69 years, okay?
Yeah.
So I certainly agree with you that banks are open for business. Just, if you have a look at the headlines in the marketplace and they're leading with interest rates as the headline, that tells you they're open for business. And the Reserve Bank of Australia has kicked in, I think, with a $90 billion package for the banks to ensure that they've got plenty of credit to help out. But they are experiencing some massive delays. Tell me a little bit more about that, Travis.
Absolutely. I mean, look, anytime you lower interest rates to where we are at the moment, you're going to get a rush on mortgages. So what we're looking at the moment is we're looking at extremely high volumes of new mortgage applications going through the system. I think it was AFG and Connective announced the other day that they've had one of their record months for a number of applications through.
AFG and Connective being, you want to explain who they are?
Sorry, aggregators that allow brokers to deal with the market.
Yeah.
So when brokers put deals through to the banks, they put them through their aggregator, and those as a complete aggregation, as a whole, through the broker market, we're seeing some record numbers going through to the lenders. So what that does is it just fills the funnel up from the top, and the banks only have so many employees. And apart from only having so many employees, we're also dealing with COVID at the moment, which means that a lot of these employees are working from home or working from remote sites. Yep. So like everybody in the industry, we're learning how to do this, and we're learning how to get better at it. And the banks are getting better at it. Some banks are a lot better at it than other banks. Some banks have been doing it for a long time already. So they'll naturally survive better or thrive better in this current market.
Yeah.
But it's certainly, it's the number of volume and applications that are going through the market at the moment is extremely high. So from that perspective alone, there's delays in the system.
Yeah, and obviously that's I'm hearing of up to 2 hour, 3 hour wait times when you're on the phone at the bank. Tell me, would you recommend that a purchaser or somebody that's looking to get finance or refinance go directly to the bank or use a mortgage broker?
Look, using a mortgage broker gives you a better lay of the field. So you're going to get more options in the market. If you go direct to a bank, the only thing that a bank can offer you is their products. Whereas if you go to a mortgage broker, you may be able to get a rate that's slightly different because of a particular industry you might work in, or there's something within your financial situation that is unique. And there are certain lenders that handle those types of unique situations with financial needs. So going to a broker definitely is an advantage in terms of shopping the market, because you're able to go for your own personal circumstances, what's going to be the most suitable loan for you in your personal circumstances. So definitely a broker from that perspective, absolutely.
Yeah, excellent. And the one question we get asked all the time is interest rates, right? It's the first thing people think of when talking to a bank, right?
Yeah.
Tell me what you're seeing at the moment in the marketplace, Travis, with regards to interest rates, but more importantly, what else comes with those interest rates? Because we all know that nothing's for free.
Yeah.
Okay.
So what I'm seeing in the market at the moment is that a lot of the banks are offering great rates. I mean, as you said earlier, the best rates in the market that we've seen for probably in our lifetimes. Yeah. But that comes at a cost in terms of they're wanting you to fix your rates. And they're wanting most of the good rates in the market at the moment are being fixed between 2 and 3 years. Which is also not a bad thing given the low level of the rates that we're seeing at the moment. So to fix your loan for 2 to 3 years, it's just rather understanding that and making sure that you're completely aware of how a fixed loan actually operates.
And what the implications
and
are.
what the implications are, a little bit down the line. So, for instance, next year, if you want to go and refinance and draw some equity out, you're going to have to pay some break cost fees on that. And if you don't plan ahead for that, it can be costly. But, in 90% of the population, if you're just having an owner-occupied home, there's nothing wrong with fixing that, especially for 2 years and having that certainty, particularly in the times at the moment.
Yeah. And obviously there's a difference between people, getting interest rates on their own home.
Yes.
And paying principal and interest versus investors with interest only. Do you want to talk about that, Travis?
Yeah, absolutely. So, naturally in the markets, the cheapest rates in the market are owner-occupied rates. I think the cheapest rate in the market that I saw on the system this morning was 2.09%. Still waiting for that elusive bank. Who's going to be the first mover to get to 1.99? I don't know, but we'll see along the line. That's the cheapest rate that I've seen in the market at the moment, and that's fixed for 2 years, 2.09%. And you've got to understand that that's for your home that you live in. That's not for investment properties, things like that. So it's for the home that you live in, and generally in a loan to value ratio that is at 80%, meaning that the amount of lending that you have on the home is less than 80% of the value of the home.
Yep.
And then when you go into investment rates, you start looking a little bit higher, depending on your industry. As I said, we've got some lenders that are very industry specific that are offering some great rates out there. They're offering around 2.44 interest only, all the way up to other lenders who, just generally open. They're looking at around about the high twos, early threes for interest-only rates there.
Yeah. Listen, I think, guys, that the message, this is me now to the audience, the message out there is really this. A lot of people are seeing this as a crisis, and they're contracting, and they're waiting, and they're waiting, and they're waiting. Some of them don't have a choice because of their industry, right? And who unfortunately may have been made, may have lost their job or been made redundant and don't have a choice. But my message to the people that are in a good position, and by good position I mean that you're in an industry where your job is safe, right? And you've got to talk to your employer about that. You've got to have that conversation. It all comes back to communication. But the message I'm giving to my clients right now is, if you're in a position where your job is safe and your income is protected and you can borrow money, go out there and invest, because take advantage of having very little competition that you're up against. I mean, we are putting together some incredible deals for our clients. They are taking the benefit out of it. And I won't get into figures and numbers right now, but you wouldn't get these deals outside of this current environment. So you've got people right now that, the smart investors. I've said it all along, and I was around in 2008 when we had the global financial crisis, and I've studied the markets when we've had turmoil and tragedy in the markets at the time. And the one thing that's always been the case, and the theme is that, people will make a fortune in this current environment. The smart investors have actually planned for this a long time ago. And, we've got a lot of sophisticated, high net worth clients on our database that are making a killing right now because they're in a position where they can take action. They've got their buffers in place, their incomes are protected, they're in good industries, and they're going out there and they're cleaning up.
Yeah. And
that's the message I'm putting out to clients right now. Because at the end of the day, this is going to pass. For those of, there's people out there that think the world's going to end. It ain't going to happen. If you have a look from a global perspective right now, you've got parts of the world that are opening up their economy again in the coming weeks. And I'm not just talking about the USA, right? So I'm starting to see less. Like, it's funny, I read my news feed, and for once, I've started to see other news.
Yes.
Other than this current, other than the virus, right? I've started to see other things on my newsfeed. But, what I'm putting out there to clients is that don't just think it's all doom and gloom.
Yeah.
This is the opportunity to make up for what you haven't done in the past.
Yes.
This is the opportunity to take advantage of what's presented in front of you, because I tell you one thing's for certain, people are going to become millionaires out of this in 2020, right, based on the decisions they make today. Because this is a thing you find, Travis, you'll know, like, what you're doing in 2020, what you're doing today will dictate where you'll be in 10 years' time.
Sure.
Okay? And unfortunately, in most parts of the world, we have this sheep herd mentality, right? I'm going to wait for somebody else to do it first and then I'll do it. You're never going to make any money. People with that mindset never make any money. Because they're always way behind the eight ball. Okay? They're always behind. You know, they work out the market's taken off 12 months after the market took off. Right? They work out the market's plateaued 12 months after the market plateaued, right?
Yep.
So the message I'm putting out there is, if you're in a position to do so, take action. So with regards to lending, you said that it's about income, right?
Yeah.
Versus credit. So banks are certainly lending. Tell me about like when it comes to income. You know, I'm hearing things like, you know, banks are actually, even after you've settled on the loan, they're giving you a call to just check that everything's okay with your job, with your industry, you know, and they're even asking questions along the lines of, have you had a conversation with your employer? Is your job safe?
Yeah, absolutely.
Is that you're seeing that with a lot of the lenders?
A lot more of that, yeah. So it's around that verification of the income. So the banks are, you know, last year we had that whole Royal Commission into the home loan or mortgage industry, and part of that came out the responsible lending.
Yep.
And part of that responsible lending is making sure that you're able to, you know, fulfill your commitments to the loan that you're taking out. And the banks are seeing that as part of that responsible lending practice.
Yep.
So, and then obviously us as brokers as well, we have to make those inquiries and help the banks with that. So, you know, when it comes to getting new loans, the new loans are there. They're there to be had. We can get you the best interest rates you've probably ever had before in your life.
Yep.
But we're going to ask more questions.
Yeah.
We're going to need more details from you. So from that perspective, you can just bear with us and let us ask those extra questions.
Yep.
Understand that the banks are going to phone your HR departments and check up on your employment, make sure that your hours haven't been cut. And then even when they've done that, they're still going to phone again and they're going to ask again.
Yep.
You know, if you can bite the bullet on that, you're sitting in the pound seat.
Well, you know, mate, it's one of the reasons why we didn't suffer as great back in 2008 with the global financial crisis, because our banks, I think their lending criteria is incredible. Now, here I am sitting here saying that when, you know, I know what we have to go through. But, you know, I've always said it, like, you don't want an environment again where everybody and anybody can get a loan.
Yep.
Right? You want it. I want strict lending conditions, because then I know my clients are safe.
Yeah.
And if you get a loan in this current environment, you know you deserve it. You know you've had to tick more boxes than ever before.
Absolutely. Our banking industry and lending industry is probably one of the most stable in the world.
Yep.
You know, backed by a government who've been very shrewd in terms of, you know, what they're putting there, you know, what regulation they're putting into place and how they're controlling it. Not controlling it, but guiding it. And I think that's put us in a really good position where we've got a very, very stable banking industry and lending industry.
Yeah.
And that's why we're still open for business.
Yep. And let's not forget that the banks and the government incentives there, obviously, because of the current situation, are there to help us as landlords, as investors, as homeowners. But it really is, you know, the employment industry, okay? It really is about making sure that all of our industries, or as many of our industries as possible, are able to continue to expand and employ staff. I, for one, I mean, you know look at what we're doing in our business, Travis, right?
Absolutely.
We're expanding, we're hiring, you know, and it is all about making sure that the small, medium enterprise end of the market are continuing to flourish and prosper. And this is the thing that a lot of people don't understand about interest rates. They're not there for investors, okay? They never have been. I don't think they ever will be. It's not a bad thing. You just got to understand the rules. Yep. But they are there to ensure that businesses continue to expand, continue to grow, and borrow money to expand and grow, so they can hire more staff and, you know, and keep the unemployment rate relatively low. What are you seeing? I know we deal with all types, but tell me the differences right now, Travis, with regards to, your PAYG employee, but for the self-employed out there, right? For the sole traders, for the contractors. Tell me about the current landscape, and if there's any difference to those guys right now.
Yeah, I think they're coming under a lot more scrutiny than your average PAYG. I think one of the lenders said the other day, the golden goose is the PAYG employer who hasn't been cut hours yet. Yeah. They like the vanilla deal at the moment, if you will. So if you are just a normal PAYG employee and you've got a great salary and your job hasn't been affected, you're sitting in the prime seat in terms of lending at the moment.
Yeah.
From sole traders and self-employed perspective, I think the key is going to be around showing that you're still open for business, you're still doing the same amount of business, and you might have contracts in place that show that you're still going to have that income coming in the future.
Yep.
So it's not just really around showing what you've earned in the past anymore, but it's how have you future-proofed yourself.
Got it, yeah.
So take this crisis and learn from it and see how you can future-proof yourself, because it's only going to put you in good stead moving forward.
Yeah.
And when we have those conversations with clients, I'm going to have to ask them, so what are you doing to make sure that you're going to generate revenue in the future?
Yeah, excellent. All right, Travis, listen, thank you so much for your time today, mate. I think it's really important that we get this information out to people right now because they've got questions.
Yeah.
And on a last note, is there anything else you'd like to add? And what's your advice right now for people that, we spoke about ones that can't do anything, unfortunately, right now, but what's your advice as a mortgage broker to people right now that are looking, either have loans in place right now or that are looking to take up loans? What would be your advice?
I think my advice for everybody at the moment is quite simply take a good, hard look at your finances. Right now is the opportunity in the market to be able to take advantage of things like this. So sit down, have a look at it in depth, make sure you understand where you are, where you could be, and have a chat with your mortgage broker, have a chat with your private banker, whoever that might be.
Yeah.
And make sure that you're in the best possible position moving forward. So are you able to take advantage of investments in the market right now? Well, if you haven't sorted out your finances, you might not be in that position to be able to take advantage of a property that'll come on the market. So sort that out now so that you're in that position to be able to take advantage. If you're in a position where you have been affected by the virus, again, slow down. You've got the time at the moment. Phone your lender. Understand what they can do to help you out. This is such a good time for everybody to understand exactly where their financial situation stands. And that's probably the key advice that I can give to everybody is understand your financial situation and understand it well. Don't just understand that I've got one or two investment loans. Understand I've got one or two investment loans that have got X amount of dollars outstanding at X interest rate. I need to know that down to the final dollar. That's the advice I need to give to everybody.
Thank you, Travis. It's been an absolute pleasure talking to you. It's such a hot topic right now, finance and lending, because most of us have got loans. My final message would be what I said at the start: just simply communicate. Yep. I've always been a believer. Communicate can solve any problem, can handle any situation. It's the one thing we don't do enough of or correctly. Simple as that may sound, communicate. So for those of you guys out there right now that have got a home loan or looking to get a loan, come and talk to us. Come and talk to us. If you've got a relationship with your bank, obviously talk to them. But if you want some sound advice or some objective advice with regards to your current situation, give us a phone call. Like, we can set up a Zoom appointment with you guys. We can't give you a coffee, unfortunately, but have a chat to us. Have a look at how you can take advantage of your current situation, or have a look at how you can take advantage of what's coming up ahead. Or if you need to consolidate and clean up your affairs right now, again, it's a perfect opportunity. I think the message is, though, there are going to be some delays.
Yeah.
But banks are working with us, working with you, not against you. That's the key thing to remember.
Yes.
Thanks again, Travis.
No problems. Thanks very much for having me.